Welcome back to The Exchange, everybody. Higher interest rates and regulatory pressures keeping traditional lenders on the sidelines more and more when it comes to commercial real estate. But our next guest says this is providing a huge opportunity for private credit, especially as rate cut expectations fade just a bit. Greg Friedman is CEO of Peachtree Group, a private equity firm that invests in and lends to commercial real estate. Greg, welcome. Good to have you with us.
Yeah, thank you, Tyler.
So let me understand, you have really two businesses, a private equity business where you own commercial real estate, among other businesses, and then a private credit business where you are lending mostly to whom? To commercial real estate developers?
That's correct. So we're typically lending to like developers, regional ownership groups that own just commercial real estate across the U.S.
So they need money because, in part, as I understand it, the traditional lending sources have been restricted either by regulation or capital so that they don't have the money to lend. Am I right on that?
That's right. Like, so if you look at
you're exploiting a gap in the
financing market.
In the financing market, yeah.
Exactly, because the commercial, if you look at the commercial real estate lending market, banks make up 50% of the commercial real estate lending market today. Unfortunately, banks are broken today. They have a lot of regulatory pressure. They're not able to lend at the same levels that they once were able to lend at. And most of the, the loans for commercial real estate is coming from the regional banks that have been under, heavy pressure. And that's opening up a gap for us to fill, to step in and provide those loans. And in a lot of cases, we're partnering with banks and helping to convert their commercial real estate exposure into C&I exposure to help limit that.
So you not only would lend to a borrower, but would you buy loans from a bank?
We would, and we do buy loans. This year alone, we've already bought, close to $250 million of loans since the end of last year till now. As a firm, we bought over 250 first mortgage loans. We bought a bunch of loans during the pandemic, as well as during the great financial crisis. And, we've bought over, a dozen loans in the last, 5 months.
So as you look as a lender, as a private equity company, at all of the opportunities that might come across your desk in commercial real estate, tell me where the strong points are and where the weak points are. When you get an application for a loan from a data center, you go check, boom, bang, great, right. They're going to make money. Right. Some other kind of industrial commercial real estate, check, great, wonderful. Commercial retail development. I got to look at that one a little hard. Office. Oh, I got to look at that one even harder. What? Segment it out for me.
Yeah, sure. So because commercial real estate is it's a huge industry. When you look at it, and there's different segments. Obviously, office is going through a lot of secular distress. We're not as bullish on the office segment, but as we're looking across the different segments of commercial real estate, like multifamily, hotels, industrial, we're looking at making loans typically to projects that are going through some type of transition. So these are, experienced operators, developers, owners of assets, where we're looking to provide, financing so that we can help them, bridge from, taking, if it's a construction loan, if it's an acquisition loan, where they're going to, basically improve the performance of that asset and then turn around once they stabilize it, they're going to take us out with permanent debt. And that's typically what's in a typical market. Now, today, just given how bad the credit markets are and how soft there's not as many lenders as there once were. In a lot of cases, we're providing that bridge capital to allow for when a loan's maturing, because you have this wall of debt maturity right now. You have over $1 trillion of loans maturing between now and the next 12 months. In a lot of cases, borrowers are not able to find another bank or find a traditional permanent lender to take out that loan maturity. So we're stepping in and providing that capital to bridge them for the next couple of years until the market's normalized.
If I've heard a data center mentioned once this week on CNBC, I've heard it 100 times.
Right.
Tell me about what you're seeing in that particular area and what the buzz is around data centers and your business and how involved you are in financing, lending to.
Sure. So within data centers, we're not that heavily involved. Mm-hmm. So we're not, our traditional, like if you look at the type of, projects we're financing, it's primarily multifamily, industrial, self-storage, hotels. We don't do a lot in data centers, but data centers, it's a big industry and it's obviously, benefiting from the AI boom and everything else that's happening right now.
I have to just observe that I think America must be the only country that has created multiple billionaires based on the fact that we have too much junk.
Right.
And we need storage units to store all this stuff. I want to ask you, your company began basically in the hotel world, or that was a big part of the core of your business for a long time. Tell me how hotels are doing right now.
Yeah, so hotels are performing well for the most part. They've recovered extremely well from the pandemic. Obviously, it was the hardest hit property type. It's in most cases, hotels are back or above pre-pandemic levels, and the hotel industry really benefits from the fact that there's just a lack of new supply coming in our industry because of the impact of COVID, as well as just the impact of the credit markets, where it's hard to get a construction loan today. So demand's way outpacing any new supply getting delivered. So the fundamentals are really strong across the lodging space today.
All right, great. Thanks very much. Continued good fortune to you.
Thank you. I appreciate it.